Hello and welcome. You're tuned into this MF Corner YouTube edition, closer to the valley. So we are in the festive mode and we will tell you everything that can make your portfolio profitable and have a very happy new Samvat as well. We have just the expert for this discussion, Harshvardhan Roongta, CFP Roongta Securities is joining us now. Harshvardhan, thank you so much for joining us today and season's greetings to you as well. You know, we've seen a lot of momentum in the markets. That's what been the story in last 1 month. So can you give us a sense of what momentum investing is? How can it be connected to mutual funds?
Well, Sonal, the festive greetings to you as well, and thank you for having me on the show. We're touching upon a very important topic, which is the momentum investing. We've been seeing a lot of fund houses introduce new schemes under the momentum or the factor or the quant-based investing. So what is momentum investing? So momentum investing essentially is more of a trading strategy. So based on certain market technical and factors, stock selection is being made by the fund manager. So basically what they do is they select companies which are showing an upward price trend based on certain underlying technical factors. So the idea is to identify stocks which are moving up in prices, identify a peak that these companies will reach, and then you sell off at that point in time. So essentially buying and selling of companies based purely on market trends and not basis on the fundamentals or the valuations matrix. So that's essentially what a momentum investing would mean.
Okay, all right. And that is something that, as you said, a lot of fund managers are looking at as well, a lot of momentum investing, that is. So what are some of the factors that the fund managers use in this kind of investing?
So, Sonal, there would be several factors that fund managers would be looking at. So essentially, as I said, trying to just capture the technical part of the market trend. So, the most common ones would be probably a 50-day moving average or a 200-day moving average. You compare prices between the two and take a call whether a particular stock is looking to go up from here. And when the data point says that, it's okay, now it's kind of peaked out, the fund manager would kind of sell. So let me give you an example. So there is one fund that that we can talk about is probably a Tata Nifty Mid-Cap Momentum 50 Index Fund. So what does this do? So you know that a mid-cap index would have 150 companies. So out of these 150 companies, the fund is going to try. So the companies are going to be constant. What they're going to do is identify 50 companies out of this list of 150 and basis on the 50-day moving average or a 200-day moving average or any other technical parameters and invest only into those 50 companies out of the 150. So they follow an index. The Nifty would have a 50 momentum, mid-cap 50 momentum index. So they identify those companies, invest in those companies, try and buy and sell at the market lows and peaks and try and make a profit or generate an alpha, which probably a mid-cap 150 index would not be able to. So this is the essential purpose of investing into a quant or a momentum-based investing fund, wherein you're trying to generate an alpha over and above the index that it is tracking.
Okay, take that point. But we come down to the same question. But is momentum investing for Indian investors? Is that something they should look at?
Honestly speaking, Sonal, as I said, momentum investing is more for traders and not for investors. So why I say traders? Because the trader would essentially try to capture some gaps in the market, try and capture buy into a stock which is going up, then time it to even sell it. That's not essentially what an investor would do. And if you look at a retail Indian investor, they're by and large, not familiar with the market functioning very deeply. So I think a retail investor is well put to invest into a diversified fund rather than going into something which is quant-based. And if they don't understand, because momentum investing would also mean that it is going to be more volatile in nature. So I don't think a retail investor is equipped enough to deal with this volatility over and above what an equity volatility in any case would be.
Okay, take that point. So in that case, what are the typical returns of a momentum fund versus a regular fund? Yes, I know it's largely for traders versus investors, but what do the numbers look like?
So it's difficult to give you a comparison because they've performed different in different market cycles. However, if you look at a short-term period, so if I look at say probably something in say 3 months to 6 months or 1 year period, there could be instances where a momentum. So if I take this mid-cap index, so there's a mid-cap 150 index and there's a mid-cap momentum 50 index. So if I just compare these two in a shorter period of time, then there could be instances where a momentum strategy has worked better because it tries to capture the short-term market trends. But if you look at a 1, 3 or a 5 year period, I think it's reasonably established that a mid-cap index fund would do better than a mid-cap momentum 50 index fund. And retail investors being long-term investors, I think they should stick to the traditional style of a regular fund and not momentum, because they don't understand the volatility associated with it. And long-term investing is more to do with the fundamentals and valuation.
No, absolutely. Take your point there. But still, in some case, there would be some traders seeing this as well, though it's MF Corner. Would you advise some of the momentum funds, something that you think in our asset classes or in our asset management industry stand out?
Yeah. So as I said, given a choice, I wouldn't put it into an investor's portfolio, a retail investor's portfolio. However, if somebody is keen to ride this momentum and wants to experience this, I think a momentum strategy in the large and mid cap space just broadens the horizon of stock selection. So you take probably a Kotak, Nifty 200 momentum 30 index fund. So what does it mean? That the universe to invest would be of 200 companies. And based on these underlying factors, you will have 30 companies that will be forming a part of the portfolio. So Kotak has a strategy like this, and even ICICI for that matter. It's a ICICI Nifty 200 momentum 30 index fund. So I think these are broader base, which has large and mid cap. So horizon of investor companies are bigger, and you'll have 30 companies out of that. So I think that is still something, if somebody is keen to invest, can add into their portfolio.
Okay, all right. Take that point. And Harshvardhan, thank you so much for explaining such a complicated topic in the simplest words. And as you said, this is not something that a retail investor should look at so much. And expert advice is something they should look upon to. And generally, what factors are considered when fund managers look at this investing as well. Thank you so much for joining us today.
My pleasure. Thank you so much.
Okay, with that, we'll take your leave. But stay tuned to CNBC TV 18 for more news and updates.